What do you believe will happen to Tesla's stock in the upcoming weeks, considering its present stock market performance? The current state of the economy is rather concerning and influences the stock's volatility in the market. It's important to note that Social Capital CEO Chamath Palihapitiya predicts a Tesla stock crash the following week. In a recent episode of the All In podcast, billionaire Chamath Palihapitiya, who is also a financial advisor to the president, reiterated his prediction that the Federal Reserve will continue to raise interest rates beyond what you all want or think is possible. In addition to being the founder of Social Capital, a venture capital firm he started in 2011, Chamath Palihapitiya is a Silicon Valley investor who has made a name for himself in the tech industry. He supports SPACs, a type of investment vehicle that permits private companies to go public with less scrutiny from the SEC. Additionally, Palihapitiya is a sponsor and investor in 6 other companies that have merged with Virgin and Galactic and Clover Health. At an Axios event in late October, so-called SPAC King Chamath Palihapitiya revealed what he believed contributed to the rapid rise and collapse of the SPAC market, the abbreviation for special purpose acquisition companies that provided a way for young firms to go public without some of the typical IPO hurdles. Hapitiya claimed that the perverted market conditions he profited from during the height of the COVID pandemic were caused by the zero interest rates the Federal Reserve allowed to persist for years. Despite a reset due to economic and regulatory challenges, SPACs, which gained prominence in the first 2 years of the epidemic, still has more than 450 agreements available for a merger target before 2023 deadlines. We are discovering what went wrong, that is, that we had more than 10 years of zero interest rates according to SPAC study. Palihapitiya stated that the market was fundamentally flawed because it had been warped, reality had been skewed, and manias and asset bubbles had been permitted to develop in every sector of the economy. Low interest rates then translate into reduced returns on savings accounts, which may stimulate economic development and boost investment in high-growth assets. About a year after correctly predicting the collapse of world markets this year in yet another All-In podcast episode, billionaire investor Chamath Palihapitiya claims he is in a position to profit from a major market rally. Palihapitiya says he thinks the stock market index has carved a temporary bottom, which is why he is bullish on the S&P 500. Although Palihapitiya is bullish on the stock market, he predicts that the rally will likely be unsustainable. He says that he agrees with fellow venture capitalist David Sachs' sentiments that the U.S. will likely see a huge recession next year due to the impact of the Fed's rapid interest rate hikes on the economy. I think this is the point where you have to start to get pretty constructive about where things are going. The investor says, if this stuff could not bring the market down, it's hard to see something other than an exogenous event, though. In the short term, this thing is going up. We've generally been positioned for it to go up, and at some point we will reverse and position for it to go back down, but it's going up. This was in late October, and since then, things have taken a turn. Now, in a new episode of the All In podcast, Chamath Palihapitiya is warning investors that the Federal Reserve is determined to crush demand in an effort to tame inflation. If you take a very balanced view of what has happened in the last few weeks, you have to start with the Federal Reserve. They said that rates will probably be higher than all of you think, and they'll be higher for longer than all of you want. It's up for debate whether or not that will. Understand the mathematical implication of it, says. Palihapitiya advises investors to buckle up now that the Fed has signaled that markets will likely have to withstand more interest rate hikes than consensus expectation. Palihapitiya, the U.S. Federal Reserve recently raised interest rates by 0.75% for the 4th consecutive time, bringing the benchmark federal funds rate to a range of 3.75% to 4%. He continued by saying that this essentially meant that the dollar that is in front of you is now meaningfully more important than the dollar that is far away from you. Generally speaking, investors anticipate that interest rates will peak at roughly 4.75% by the next year. Nevertheless, according to Palihapitiya, investors need to brace themselves for the possibility that the Fed will continue to raise rates through 2025. Powell went on to say that he would prefer to overcorrect and break things because he has a toolbox to fix broken phones than to undercorrect and have rampant inflation. To be more specific, you can get shared Palihapitiya. Powell also explained that the Fed will raise rates until demand is destroyed, and enough demand is destroyed to tame inflation, which has enormous implications for all of us as we must all work to build businesses, raise capital, and make investments. Palihapitiya stated that things are becoming more difficult than he had anticipated. He had originally believed that the United States could weather the worst of this by the middle of 2023, but that does not seem to be the case. As a result, you have to prepare for the worst case scenario, which means that, well, I'm thinking that man rates could be higher for much longer, which means we could be in this market until early 2025. Naturally, he argued, this might have a significant impact on Tesla too. According to Chamath Palihapitiya, Tesla's stock is currently trading around $200 after falling to about $197 on November 7th, and the company continues to show extreme volatility in the stock market. It looks like things will only get worse from here. Inflation, in his opinion, will finally show its ugly head in the next 6 months, which would give the Fed more confidence to keep hiking interest rates, which would then lead to another financial market sell-off. We have all of these encouraging developments coming up, but the issue is that there is still a great deal of risk to the downside. Since we haven't witnessed David's second recessionary fall, the double dip will be costly, according to venture capitalists. Palihapitiya also projects that until the first half of 2024, the Federal Reserve will raise interest rates to 5.5%. Palihapitiya claims that a prolonged high interest rate environment will destroy hundreds of billions of dollars worth of venture capital. He also claims that we are only beginning to notice the consequences and how they will affect people's portfolios, which will lead to modify your behavior. This SBF Palihapitiya claims that Sam Bankman-Fried's stuff is just the tip of the iceberg in terms of the money at risk. The creator and former CEO of FTX, a cryptocurrency derivatives exchange that declared bankruptcy last week, is Sam Bankman-Fried. Tesla's stock has been declining recently, and on November 21st, it reached a 2-year low of roughly $168 per share, down 6.8% from November 2020. Some of the same factors that caused the stock to fall more than 40% during the previous 3 months in mid-November are also responsible for the current collapse. Adam Jonas, a longtime analyst at Morgan Stanley, in a recent email to clients, Tesla Bull stated that the company's stock is approaching his bear case price of $150 per share, which makes it more appealing when looking at it from an EBITDA multiple perspective. Our FY25 estimate SBC burden indicates that Tesla shares would price at roughly 12.5x EV/EBITDA and 23x PE, which we see as exceptional value for a self-funded 20 to 30% top-line grower in the best position to gain from re-architecting the U.S. onshore. Nearshore, large-scale French shore green supply chain. The expert thinks that despite obstacles like declining demand and price, there is now a window of opportunity for potential Tesla investors. Cuts in China. According to Morgan Stanley, Tesla is the only Chinese manufacturer of electric vehicles that makes money from sales of its vehicles. The analyst, who also emphasized Tesla's potential to gain from consumer tax credits in the U.S., restated his $330 price estimate. According to a note written by Jonas, even though Silicon Valley venture capitalist investor Chamath Palihapitiya cautions against oblique scenarios in the stock market, target overall macroeconomic issues have hampered Tesla's anticipated success. Nevertheless, some people are still optimistic about the leading EV companies in the future.